Welcome back to Robinhood Stock Market Watchlist group meeting. My name is Carlos. I am the creator and administrator of the group. Today is Sunday, June 26th. We're going to go over a lot of information, activity, as well as looking ahead to see what this week looks like. But first, we always like to kind of go over something a little educational before we start getting into that, because the more we learn, the more we'll earn. And today I wanted to kind of go over the differences between an amateur trader and a professional trader, because knowing the difference between the two is like knowing the difference between right and wrong, and that's something that, especially as a new trader, you don't know that unless you're going to go through a lot of turmoil, a lot of ups and downs, and but it's just great to just kind of learn from someone that already has a lot of that experience. So I'm going to pull up an image here. Again, this is the differences between an amateur trader and a professional trader, where an amateur trader will often let losers run and hope that they turn around. And there's that word hope. I call it the hope system, where they're throwing money at something and hoping that it sticks, because they don't really have any set plan or whatnot. And so where a professional trader will cut losers when a stop is reached and a trade idea it becomes invalid. And so because they know what's going on, and even if they don't exactly there's always some kind of stop loss, but there's also indications letting you know when to get in and when to get out, and those are our primary indicators are our moving averages. And that's something that we've talked a lot about in previous meetings, and those are our buying and selling signals that we really have to stay focused on, because there are parts of the system that lets us know, whether there's an uptrend or a downtrend. So amateur traders will close winners too early because of fear of giving back profits. And I've seen this a lot lately, because we've been in the bearish season for the last 6 months, and now we've just entered the bullish season in the last week. And so finally, a lot of people were buying, on the dips, a couple of weeks ago. Now they got some profit and then they sold. And I'm like, what are you doing? I mean, this is just the beginning. At least, our bullish season is probably going to last at least 3 months, if not, 4 or 5, maybe 6. I'm thinking probably 4 or 5. But the professional traders will let winners run until profit order or when a clear signs are given to exit. Trust their system. And again, that is our moving averages that helps provide us these certain algorithms. Where an amateur trader change their trading system after a few losing trades, because they just don't know what's working, and they'll try something until it works for a while. But the stock market's always changing, and so it's highly recommended to have lots of strategies for all different types of scenarios, whether we're in a bear market, bull market, whether the stock market surges or plunges. Professional traders will stick to their rules religiously and think process oriented. These rules, and that's something that we've talked about before. That was something we talked about last week on last week's meeting. Rules are very, very important, and that's why each trader and investor has to have their own set of highly strict rules that they must never break. Amateur traders will also close their trades, never look at them, and avoid a learning effect. And it's, again, the more you learn, the more that you'll earn. And that's why you always want to learn from whatever you're doing, as well as what any other trader or investor are doing. Learn from other people's mistakes, learn from their success. Where a professional trader will analyze their past performance, keep a trading journal, and learn from their past behaviors, but also learn from other people's behaviors. That's one of the key success with our group, is that we really share a lot of our experiences and information and knowledge. That way everyone can benefit from it. in a very short period of time. Amateur traders overtrade, sometimes even revenge trade, and hope to make a lot of money fast. Now, there's nothing wrong with making a lot of money fast. It's important that it's done properly. Especially when it comes to revenge trade, that's because your emotions can affect you, and you have to learn to be able to identify your emotions or your feelings, and think more strategically, analytically, and again, just like the previous rule, where you think process oriented. Think of the process. The process is the moving averages. When the price line cuts through the moving average lines, and when the moving average lines crosses over each other, that is our buying and selling signal. That is part of the process. Professional traders are aware of their emotional impacts and know how to identify and manage their impulsive buying and selling decisions. Amateur traders open their trading platform and then desperately try to find random trade entries. Sometimes they'll even go on social media and say, "Hey, I got $1,000. What should I put it on?" And then you'll have all these random things. It's part of the rules is to always follow the money, and one of the reasons for that is because usually there could be inside information. There could be you kind of follow the majority because the majority must know something. And so that's where we like to follow either like the volume, open interest, or whatever that's showing the activity. Where professional traders keep a trading plan and trend their trading day ahead, follow a structured approach, and that is something that we do every weekend, every day, where there's a certain process of certain things to look for. That way we always know what each day is going to be like. Is it going to be bearish? Is it going to be bullish? So, and that's something that we'll get into here in just a little bit. But, and again, we do talk a lot about, many different things, like the rules, moving averages. But another really, really important key is to knowing the patterns. Now, patterns can also, be, occasionally false, but a lot of times they're very accurate. We can find patterns. Algorithms are very common in throughout the day, almost in every stock, but we can occasionally find them, on our daily graphs, for more or less a short-term or long-term investor. We can definitely, see these. But they're very common, throughout the day. If you're looking at your 1 minute chart, your 5 minute chart, and so it can happen right at opening. Like for example, on the top left, the double top, where let's say the stock market opens up. The first 5 minutes, the stock market or whatever the share you're looking at, shoots up. The first 5 minutes, and then the next 5 minutes starts to hesitate, kind of falls down, forms this little neckline. Then the next 5 minutes kind of shoots up right around the same point that it did before. It starts to hesitate, starts to kind of, level off right around the same neckline. It's hesitating right there. That's the double top. It's trying to let you know what's going to happen before it happens. And so and a lot of people get confused because these are bearish and bullish patterns, mainly predicting that the stock's either going to go up temporarily or down temporarily. And so a lot of people ask, why is it target down? Well, when it comes to stock options, you can bet against stocks. You can bet that the stock goes down. If it does, your account goes up. So let's say, so the stock market opens up, it's 15 minutes, things start to hesitate, and the entry point is kind of like our buy point. So it's saying just to confirm that it is going to do what it's supposed to do, wait until it drops below the neckline, and then it's for sure going to keep going down until further notice. So the entry is our buy point, to buy and to bet against the stock, betting it's going to go down. The target is our, obviously where we want to sell, get in, get out. and it could be 5 minutes worth of holding, it could be 10 minutes, it could be all day, because this stock can be keep going down. And then when to sell is when the moving averages, when the price line cuts through the moving average lines. And so that is when it tells you to sell. Now, if you're just using the Robinhood application, that's fine. That is a great application, but you need another one alongside with it that provides you more advanced tools and whatnot, that things that are going to provide you, these more intelligent buying and selling decisions. Where the Robinhood application just doesn't provide that intelligent data. But Robinhood is still a very valuable application because it's very easy to execute your orders and it's very quick. And so, but it's like, working with both hands. If you're just working with one hand, you're going to be half as productive than you would if you were working with both hands. So that's how I see it. But there are other bullish patterns in here as well, like the double bottom pattern. Let's say the stock market opens and the stock price falls, whether the market's up or market's down, and it starts to hesitate and forms a new neckline and comes down, and then but it wants to recover after 15 minutes after the stock market opens. So, and a lot of times if you watch, the opening, you see a lot of that happen. There's a lot of, selling, that first 15 minutes, and that causes the stock, the price to drop. But as long as the stock price starts to come above the neckline, that's almost for sure that this stock price is going to keep going up until further notice. But we have to be careful because there could be, there could be possible multiple patterns, like the double bottom, or maybe the bearish rectangle. Maybe that second point doesn't come up past that that original neckline that we were hoping for, and then it kind of zigzags, keeps going like that. Do not use the hope system. Just know these things are trying to communicate with you, letting you know what's going to happen before it happens. It's like learning a new language. You just have to be able to understand, what these mean and how to react to it. Now, some of them are going to be bilateral, like on the bottom, where it could be either direction. In that case, you have to make sure that it picks the direction before you enter. Because like the symmetrical triangle, I used to see a lot of this with penny stocks that would just shoot straight up. And a lot of times you may see that in earnings, right after earnings, all of a sudden it shoots up and it kind of, does this and either goes up or down. But used to see that a lot with biopharmaceutical stocks, penny stocks, after some kind of, good news or manipulation or whatnot. But there's another pattern that's also very, very important to be aware of, because it happens on a daily basis, which is called the dead bouncing cat pattern, where the price reacts to some kind of news. It could be the FDA didn't approve of some kind of biopharmaceutical drug treatment, or maybe some earnings missed their earnings and had a horrible quarter, or maybe something else catastrophic happened around the world that affects world markets. Well, the price reacts to the news and then swiftly begins to fall, and then bounces off that off a certain point, then starts to kind of retrace a certain point. Well, we may get confused and may think that what if this is the double bottom or the inverse head and shoulders or something. And so we have to make sure we have to very be careful. We have to watch what happens right down here at the first bouncing point. If it keeps going down, then that means it's either going to be the dead bouncing cat, or it could be the inverse head and shoulders, where it would come down a little bit more, but then it'll bounce back up, and then maybe do another one, a third bottom point right here, just like the first one, and then that would be the inverse head and shoulders. And that's why it's really important that we look into that we look ahead for the week to determine what each day is going to be like, because it helps play a role. Like, for example, if there was an economic report that came out and it was positive, then we know that most likely that the whole entire stock market system is going to come up and start to recover. If not, if the economic report comes back bad or negative, then we know that this is going to happen all day long. And so one of the best ways to look ahead for the week is, again, knowing what economic reports are going to be reported. And the best website that I've ever found is a website called investing.com, and it's an application you can download to your app store. You just go on there and type in investing.com, and then that way you'll be able to download it. Now, if you're on the website, there's a lot of most common popular links that people click on. But if you're on the application, there should be a little calendar icon on the bottom middle area. When you click on that, the calendar will have a lot of different categories. You can choose between earnings calendar and economic calendar and holiday and dividends and whatnot. But for now, we want the economic calendar. So we'll click on that, and there's a little filters area. If you're on the application, it should be a little funnel looking thing, a little icon. Click on that. But on the website, click on filters. We want to clear everything. There's only two things that we need to see. We want to put a check mark under the United States, and under importance, there you'll see a 1 star, 3 stars, or a 2 stars and a 3 stars. We want to put a check mark under the 3 stars because we're telling this system that we want to pull everything that'll have the biggest impact on the United States stock market. So we'll click apply. And if you do this on the application, it should save it. If you're doing it on the website, you'll have to either reset the filters every time, or you can set up an account and sign in, and it should save it. So we'll look ahead. We'll go to this week. Now, it's very, very important that you double check the times and everything, because when we're looking at on the website, by default, it's going to be Eastern time. And so we need to know whether these economic reports come out during pre-market or after opening, or what part of the day, because that is when we can start seeing volatility, either right before the economic report as well as right after the economic report, because there's a lot of anticipation before, and then when the economic report comes out, the news starts blasting all that stuff, and it starts affecting people's or investors minds and stuff, causing them to react to the news, whether to buy or sell or whatever. And so, but in this case, we can always try to forecast what's going to happen before it happens. For example, Monday, so tomorrow, June 27th, we have the core durable goods order month over month for the month of May. And so this report is scheduled to come out at 8:30 in the morning in the Eastern time. The stock market opens up at 9:30. So this report comes out 1 hour before the stock market opens, which is good. This is going to create lots of volatility during pre-market, especially if that's what you're looking for. If there wasn't anything scheduled, then we may not see as much volatility, but this is really, really going to help. Now, if you're not sure what these economic reports are, now eventually, and again, I highly recommend looking at this every single day, as well as every weekend, because sometimes things change or something gets added to it. Like, for example, the crude oil inventories for Wednesday, we don't have a forecast in there, but by tomorrow morning, I bet that there probably will. And the forecast really helps provide a lot of more information for us, and I'll show you here in just a bit. But if you're not sure what these reports are, eventually you will, and you'll memorize them. But be sure to click on them. A new tab where something will appear, and you just scroll down. There's a small little paragraph that tells you what it is, and another paragraph below that tells you how it will affect the stock market. So for what it is, the core durable goods orders measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. Because aircraft orders are very volatile, the core number gives a better gauge of ordering trends. A higher reading indicates an increased manufacturing activity. So, and then this is how it'll affect the stock market. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or stock market. Now, there are some reports where we need the numbers down, or lower the better, where most reports need to be higher will be better. Where in this case, like the crude oil inventory levels, the lower the number, the better, or positive or bullish. If the number is higher, then it would be negative or bearish. Same thing with unemployment or your initial jobless claims. If the number is higher, then that means the unemployment is going up, and that's bad. That's bad for the economy. We need that number down, and that's good for the economy. Now, the forecast part. Now, the previous report for the core durable goods orders, but for the month of April, was right here at 0.4%. This is forecast to be for May at 0.3%. So it's forecast to be a little bit lower, which is not too terribly bad, but it is showing a slow decline in growth of your core durable goods orders. So that's not really a good thing. We need this number higher. It needs to be either at the previous or better. And if that turns out that way, then we can begin to see more of a bullish morning. Now, if it meets, or let's say if it doesn't meet this, then we can expect probably more bearish characteristics. And so, but a lot of times pre-market will begin to kind of know what it's going to be, but to be determined. But pending home sales, so this report is going to be reported 30 minutes after the stock market opens. So it's going to be at 10 a.m. Eastern time, and you can really tell. It's interesting how they put these in time-wise, because it really helps the volatility in the morning. And again, with a lot of these strategies that we have, especially with options, we can always straddle. Straddle is something where we can bet the stock goes up and bet the stock goes down. If we're not sure exactly how the economic report may affect the stock market, but it's going to be very, very volatile, we can always bet the stock goes up and bet it goes down. And we'll talk more about this, but I always tell everyone you can only lose what you have in one hand, but your gains in the other hand are potentially unlimited. So worst case scenario, if the stock market really moves in either direction, you may lose almost everything in one hand, but your gains in the other hand could be 200 or 300 or 400% that could easily wash your loss in the other hand and still put you ahead. And that's why I always highly recommend straddling, because it just doesn't matter which direction the stock market goes. And when we buy right before close on the previous day, we can always sell at different times in the morning to maximize our gains and minimize our losses. So on Tuesday, June 28th, we have the CB Consumer Confidence Report for the month of June. We skipped here. Pending home sales. So pending home sales is basically our used homes that are already existing, not existing home sales. So pending home sales are basically exactly what it is. It is sales that are pending. And so the National Association of the Realtors Pending Home Sales Report measures the change in the number of homes under contract to be sold, but still waiting the closing transaction, but excluding new construction, because that is on its different report. But it's showing that the previous month was significantly down a lot, and it's looking like it's going to be down more. And a lot of you guys that are into the real estate or in the mortgage industry, you're seeing it. You're already mentioning that you're seeing a lot less loans and transactions, and so these numbers are kind of letting us know what's going to happen before it's going to happen. So these seem very, very bearish, because the forecast, it's kind of forewarning us, letting us know, hey, proceed with caution, because the things are getting worse. And so with the economy, basically. And so but be prepared that these numbers are going to be lower than the previous report. And so Monday does look Monday looks bearish, and so it can easily open in the red. However, we are in the bull season now. The bull season is the summer season, and so there's a lot more bullish characteristics that may outweigh any other bearish type of characteristics. And so meaning where we may see more of a green morning and closing in the green. Typically in the bull season, 75% of the time the market opens in the green and closes in the green, where 25% of the time it may open in the red and close in the red. And so but we may see a lot of volatility throughout the day, where it may open in the green but falls in the red, and been in the red majority of the day, or hovering around 0%, and then right before close it skyrockets or something, just like last Friday. And so it just does a lot of these little weird characteristics, but these are just the changes of the season. And so the CB consumer confidence for Tuesday, again, this report comes out 30 minutes after the stock market opens. So Tuesday morning during pre-market may not be that volatile. So because Tuesday may kind of want to wait to see what the consumer confidence is going to be like, but it may be certain that the consumer confidence is just not going to be that confident. And so where the previous report for the month of May was 106.4, and so it's again forecasting to be less than that, which is not good. So another big one is going to be Wednesday. Very, very huge. So where Monday, looks like we could have a lot of volatility. Tuesday could be kind of like a little breather or something, some volatility, but then going back to Wednesday, a lot more volatility. Where we have the GDP quarterly report is scheduled to be released 1 hour before the stock market opens. That's 8:30 Eastern time. And again, this is forecast to be less, negative 0.5 or negative 1.5%, which is not good. We need these numbers up. And so the last quarter, the fourth quarter, was also down somewhat. Where the previous quarters before that, I mean, they were doing fine, but we just kind of hit a certain high level, and things are starting to kind of come down. But so we'll kind of have to wait and see what happens to this. That way we can kind of plan our day, whether it's going to be bullish or bearish. This will make our day. So that's why it's very, very important to know what's going to happen. That way we know how the day is going to play out. Now, the Fed Chair Jerome Powell is scheduled to speak 30 minutes after the stock market opens. And so this day, they're really just going to kind of go over a recap and kind of go over, a lot of the things that they were talking about last week and provide updates. And so, but this will provide, volatility. So we'll kind of have to listen in to see if he's going to, provide information that investors want to hear or don't want to hear. So, but then shortly after that, 1 hour after the stock market opens, then we have the crude oil inventory levels that will be reported. And so, but again, but it's weird because last week it was never reported. It was there, it was on the list, it was on the schedule, even that morning. And then all of a sudden, when it was supposed to be released, it disappeared. It was never released, which was absolutely weird. And I've looked at this stuff for years and I've never seen that happen. I thought maybe it was a glitch. Maybe it was the website. I tried finding it on a different website or a different system. Same exact thing. I'm like, what the heck just happened? It was like it never existed. However, that report was supposed to be negative. However, we were having a very bullish day, which was good. That negative report would have turned a bullish day into probably a bearish day, which wouldn't have been good. So I figured maybe somebody's manipulating something. Fine. So, but however, this report this week is supposed to be bullish. So hopefully it sticks. Hopefully it's bullish. And that may also mean that the Jerome Chair Powell may also say bullish things to keep the momentum going. Because during the bullish season, these guys like to make a bullish season more bullish or a bearish season more bearish. You've already witnessed that in the last 6 months. Now you're going to witness people making a bullish season more bullish, kind of like pouring fuel on a fire, and the reason why I say this regarding the crude oil inventories is because when gas prices and oil prices hit huge high levels, we started to see people, so most Americans get paid every 2 weeks from their day job. And so what we're seeing is that when they get paid, they're going to their least expensive gas station and they're fueling up, trying to make it last for 2 weeks. And so, because of that, we're seeing that the crude oil inventory levels in 1 week is down very, very low because people are fueling up. And then the next week, because everybody's trying to conserve, nobody's fueling up. So the next week, the crude oil inventory levels are high. They're full. And so that was supposed to be last week. Last week, the crude oil inventory levels were supposed to be full because nobody bought fuel, the previous week. So now people got paid, people fueled up. And so this report, the crude oil inventory levels should be down. And so that should be bullish. So even though we may have a bearish morning, we should definitely have a bullish close. So if we're straddling, we would sell our puts, secure our gains, hold our calls or buy more calls. It just depends on the moving averages, and then wait for these reports to come out. And most likely they'll be bullish. Most likely they'll provide bullish characteristics before the earnings reports come out. So that will provide good clues of what's going to happen before it happens. And so and then that comes out, and then all of a sudden, hopefully things just skyrocket. We're just going to have an awesome Wednesday close. So then Thursday we'll have the unemployment report that comes out, our initial jobless claims. In the last 2 weeks, it's been pretty high. The previous week, we've been right around 229,000 ish for the last 2 weeks. Normally, when we get to a high level, we start to see we see it bounce. Whether it plunges or surges, we see a little bounce off of whatever it hits. And so it's possible, since there wasn't really a bounce last week, that maybe this number will be steady. Hopefully it was a fluke. Maybe it'll come back down, as a lot of people have been let go from, as a lot of corporations are downsizing and whatnot. Hopefully other people are getting jobs, and these numbers will start to decline. And hopefully this will provide more bullish characteristics. If not, if this number is higher, especially over the previous one, then we can definitely expect bearish characteristics. So to be determined. However, I feel bullish. I feel because this number seems to be pretty high, and it really should come down, quite a bit. I'm hoping maybe like 217, something like that. And then Friday, July 1st, is going to be the ISM manufacturing report, the PMI for the month of June. This report is scheduled to be released, 30 minutes after the stock market opens, but it's also forecast to be lower than the previous report. So hopefully having a couple good days there. Friday morning could possibly open in the red. We'll have to kind of see what happens there, but also even though that the economic reports have the biggest impact on the entire stock market system, the next thing would be knowing our government schedule for the White House, like press conferences and Joe Biden. These people have another huge impact on the stock market, because sometimes when they talk, sometimes they just put their foot in their mouth. Sometimes they just say something that scares investors, or maybe they say something that investors want to hear. Like all of a sudden, maybe Joe Biden says something about Ford Motor Company and how they're building these new factories and blah, blah, blah. And all of a sudden, investors hear that. They're like, oh, let's buy Ford Motor Company or whatever, and or whatever company that they mention. And that's one of the key things that we need to know is what they say and how that may affect the stock market. And so if you go to Google, you can type in let's say or just type in Joe Biden's schedule, and I believe it's the first one right here. It's the factba.se or whatever. And so because their schedule is pretty much created like the night before, you'll see the schedule come on. I believe it updates right at midnight, or basically every midnight. So that way you know what's scheduled to happen. So like, for example, here's Sunday. We have the president holds a bilateral meeting with blah blah blah, and so we can really see what's going on. But for previous days, let's say for Friday, and so we have and again, this is Eastern time, so depends on what time zone you're in. You have to kind of do some math and figure out what time this would be released in your time zone. So 12:30 Eastern time would be in 9:30 a.m. on the West Coast, so where the president delivers remarks on the Supreme Court decision, blah blah blah, and then as well as a press conference. And the press conferences are usually scheduled to happen during power hour, and so these can easily affect power hour. And sometimes if they say something that investors want to hear, all of a sudden we may see a pump, and so or sometimes a press conference may scare investors. And so if we have something like here, like that's canceled, then we know there's nothing they can say that can ruin the power hour. So we would have a phenomenal power hour, because now it's all relied on us. Let's pump this baby up and let's go to the moon. And so and that's why it's really, really important to know what's going to happen before it happens. And so the next thing that has a huge impact on the stock market is earning releases. And so every Saturday in our group, I post a lot of things, but they're all saved in our featured area. Our featured area, or our announcement area, is like our bookmarks. When I created this group about 4 or 5 years ago or so, this was one of our key successes. Is me just putting or uploading things on here, and that is very, very valuable, and easily accessible. And so this is this week's most anticipated earning releases, where we have Monday after close is going to be Nike, and there's a lot of some big names in here. And then before close on Tuesdays is going to be the TD Synex. And then after close is going to be our Beyond Air. And beyond air, they make a lot of air filters, but also a lot of those breathing devices that a lot of hospitals need, as well as consumers. And then Wednesday before open is going to be our Bed Bath & Beyond, General Mills, Paychex, and McCormick. And then after close, we have our ammo that specializes in ammunition, which has been a huge subject lately regarding this whole guns and ammo, laws and restrictions and whatnot that their government's trying to implement more of. Then Thursday morning, we have our Walgreens, and then our Constellation brands. And then after close is going to be our Micron, just to finish it off for the earnings season, because this is the last week of the earnings season. Then going into next week is a whole new month, whole new quarter, and new season. And so the new season begins. So next week, as we begin new seasons, they'll start focusing on our second quarter earnings. But also, I wanted to highly remind you, this is extremely valuable, you guys. So Friday is July 1st. So if you don't know this already, so every month on the 1st, the electric vehicle industry absolutely loves to show off their numbers. That means Tesla, NIO, they're all going to go over their numbers and say, oh, we built all these many vehicles and delivered all these vehicles. Not only they usually talk about the previous month, but not only do we have a previous month, but we have a previous quarter, which will make it more volatile. NIO is probably going to go to the moon. Okay, and Tesla's going to do well. I'm sure. I'm not sure about Ford Motor Company and whatnot. However, Ford Motor Company is delivering their Lightnings, the F-150s, and so. But the first is going to be huge. So on Thursday, a lot of investors are going to start buying shares and calls on NIO and Tesla, Rivian, Lucid. So just know. Buy on rumor, sell on news. That's another, pro, saying that we have. And so, but just know what's going to happen before it happens. That way you can take advantage of it. So, the other thing, every Saturday and Sunday morning, not only do I list the top 10 most anticipated release earnings, but I also post the analysis of every top 10. So I'll continue scrolling down. And again, this is all easily accessible to you guys. So Bed Bath & Beyond, right here, we talked about it. Nice picture. Picture can say 1,000 words. And so Bed Bath & Beyond is confirmed the release of their earnings report in the morning on Wednesday, June 29th. The company's earning release has a 14% expecting an earnings beat. That is terrible. One of the worst that we've ever seen. 14%. What's the opposite of that? That would be 86% expecting an earnings miss. 86% chance this thing's going to go down. 14% chance it's going to go up. So we can really bet against these if we want, but keep in mind, if you're doing stock options on earnings, just know these are like a lottery play. Things may not always work out, but and if they don't, they can suffer what's called IV crush, or also known for implied volatility crush. It can affect the value on both ends because some news or something or a change in the system has affected it, like a split. Never hold options through a split because it will definitely devalue both ends. The only way that we can really try to, if there's going to be an implied volatility split, the only way that we can really try to make it work is by knowing there's going to be a big movement like this. So if Bed Bath & Beyond is expected to go down, option traders are pricing in around a 20% price movement in either direction. But there's an 86% chance that it's going to go down 20%. And most likely this could go down in one day, or it could take, a little bit of time, like multiple days. So, but all eyes on Bed Bath & Beyond. And I'm going to remind you guys. And so we'll keep going up. We have the Beyond Air, the magic of breathing. Beyond Air is scheduled to release their earnings report on Tuesday before this or after the stock market closes. The company's earnings release has a 38% expecting an earnings beats, which is definitely way below average. When you're looking at this regularly on a daily or on a weekly basis, usually you'll see an average is like 65%. So this is definitely way below. So there's something going on. Maybe, because maybe it was a pandemic stock. This is a very short supply, high demand. There for about a year now. I'm sure the market's flooded, and now they're like, oh crap. So, but the option traders are pricing in around a 27% price movement in either direction. I mean, that is very volatile. And however, this is perfect for straddling. I mean, again, you can only lose what you have in one hand, but your gains in the other hand are potentially unlimited. I've seen a lot of you guys do this, and you lost almost like 100% in one hand, but you just gained 4,000% in the other hand. 4,000%. If a couple of the straddling strategies don't work on the earnings, but one big one does, I mean, like I said, it washes out a lot of the your losses and puts you greatly ahead. And so this is another one that's going to be a huge mover. And so unless there's some weird manipulation, some weird glitch in the matrix, then abort. That means invalid. Something weird, get out, abort. And like, for example, if they release the earnings, during when the market's open, and then all of a sudden you see a big surge or a plunge, and then it tries to reset itself back to zero. That's what we call a glitch in the matrix, abort, because something just happened that, where, they just manipulated it to try to prevent something, but stay focused. So Micron, huge, semiconductor, microchips, there's a shortage of. And so Micron Technologies confirmed to release their earnings report on Thursday after the stock market closes. The company's earning release has a 75% expecting an earnings beat. And again, it's 65% is around average, 75% is definitely above average. Good for Micron. Option traders are pricing in around a 7.8% price movement, where the stock usually averages around 4 to 5%. So there's going to be a lot of attention on Micron come on Thursday. So then we have Nike. We're definitely in a sports athlete season. Now with baseball and a lot of other things. So hopefully Nike does pretty well. But with the cost of living and everything, a lot of people are struggling and trying to cut costs and things and be a little more frugal. So Nike is confirmed to release their earnings Monday after the stock market closes. The company's earning release has around a 56% expecting an earnings beat, where option traders are pricing in around an 8% price movement in either direction. Ammo, again, this is a big topic lately, where Ammo is confirmed to release their earnings report on Wednesday after the stock market closes. The company's earning release has a 71% expecting an earnings beat. Again, this is, even though this is a big topic now, this is for the first quarter financial earnings. But investors may try to price this stock in, knowing that it's definitely going to beat its next second quarter earnings. So the stock has averaged around a 5% price movement now, but we don't have any data from the option traders of their anticipation, but I definitely anticipate some massive volatility with this. Then there's Walgreens. Walgreens is expected to release their earnings report on Thursday morning before the stock market opens. The company's earnings release has around a 42% expecting an earnings beat, which is not good. And again, with the way the inflation's been, a lot of people are trying to be as frugal as they can, and they just believe Walmart's the place. You go to Walmart, that place is packed. Those prices are pretty low, and it's hard for other corporations to compete. Option traders are pricing in around a 5% price movement on their earnings. Paychecks, which is kind of like their own little HR system, and this is scheduled to be released on Wednesday morning before the stock market opens. The company earnings release has around a 45% expecting an earnings beat. Option traders are pricing in around a 6% price movement, where before it usually moves around 3%. So it will be a little extra volatile. McCormick is scheduled to release their earnings report on Wednesday morning before the stock market opens. Company earnings release has a 52% expecting an earnings beat. So investors just don't know what's going to happen here, especially with the shortage and shortages in staff members and delivery drivers. However, option traders are pricing in around a 5 to 6% price movement on this earnings, where normally it moves around 2 to 3%. General Mills is scheduled to release their earnings report on Wednesday morning before the stock market opens. Company release has a 56% expecting an earnings beat, which is not good for General Mills. Option traders are pricing in around a 3 to 4% price movement, where normally it moves around 2 to 3%. Now, TD SYNNEX, this is a new one for us. I think it's a fairly new stock in the stock market world, but they've never been analyzed with us here. TD SYNNEX is scheduled to release their earnings on Tuesday morning before the stock market opens. The company's earning release has a 43% expecting earnings beat, which is not good. However, option traders are pricing in around a 4% price movement in either direction, where before it moved around 3%. And so normally, once we really analyze the week, we always want to go to investing.com and look at their Sunday, kind of like their Sunday paper. It's the Sunday article, the top 5 things to watch in the markets. That way, we can make sure we're not missing anything. Where a lot of times they may talk about European and stuff, and other, markets and can definitely affect ours, but just not as much as a lot of the United States economic reports that we just went over. But this always shows the gist of all 5 things, where the European Central Bank will hold its annual retreat in Portugal, where their president, along with Federal Reserve Chair Jerome Powell and the Bank of England Governor, will appear at a panel discussion on Wednesday. The first half of what has been exceptionally a turbulent year in markets is ending, with investors wondering whether the next 6 months could bring some despite or more volatility. The economic calendar features the PCE price index, an inflation gauge watched by the Fed, along with the latest inflation data out of the Eurozone and Chinese, the PMIs. Here's what to know to start your week ahead. So number 1 was the Sintra Forum, which is that is the European Central Bank's 3-day forum in Portugal. Sintra gets underway on Mondays against a backdrop of worries over whether the central bank moves to stamp out the strongest inflation surge in decades could tip a global economy into recession. The forum will be focusing on challenges for monetary policy in a rapidly changing world. Investors will be closely watching Wednesday panel discussion with this Lagarde Powell and Bailey for insights on how the central bank heads view the trade-off between curbing inflation while still trying to ensure a soft landing for the global economy. And then so comments by the ECB officials will also be closely watched for any more details on the planned anti-fragmentation tool. So there's always a lot of good articles in here that you guys can always read if you want. Now the next thing that we need to do is look at activity, but before we do that, you guys do have some questions in the little chat room here. I'm going to kind of read over and make sure, does everything make sense? If you guys have any questions about anything that we've talked about so far, be sure to either chat in the chat room or you can voice chat. Just make sure you unmute. But I'm going to read some of these things here. One person says, what other broker you recommend besides Robinhood? I also use Webull. Webull is also a free desktop application, as well as an application you can download from your app store. You don't even have to sign up for it to start using it, but it is a very, very powerful free tool. If you ever have any questions, just ask, and that way you can learn how to use it. Your other question says, add investor.com to your list of apps. Definitely. How do you lose on an option straddle? So how do you lose on an option straddle, which isn't all the time, but if, let's say, if you buy your calls and puts and the stock price doesn't move, it does not move. Well, in the stock options world, we have time depreciation because there's an expiration date. Just like if you had something at the store like produce or a loaf of bread, everything has an expiration date on it. The closer it gets to its expiration date, the more the value that it loses, to the point where they have to put it on clearance for half price. By the time it does expire, then they have to throw it out in the garbage. It's worthless. And so stock options are kind of that way, where you have that time decay because it expires. And so if you're holding on to something and it doesn't move, both your calls and puts are going to slowly decay because it's getting closer and closer to the expiration date. So that's why you want to be actively trading your stock options. You're getting in, you're getting out. Sometimes you're kind of waiting, leaving the time decay part. And a lot of times the time decay is right in the middle of the day, when usually there's not any activity because there's no economic reports, there's nothing released, there's no press conferences, there's no Joe Biden putting his foot in his mouth, there's nothing that's, and that's why it's important to know the schedule of what's going to happen every day. So that way we know, I call it volatile times. So that way you know what time of the day it's going to be volatile. And so then you have another question here. Gas prices usually go up on pay week. So July 1st, most high volatility due to the quarterly close and expectations. Yep, we talked about that. So Friday is the beginning of the second quarter, end of the last quarter, and a lot of times companies and the government want to start talking about quarterly and stuff. But like I said, it's going to be more, we have to focus more on the electric vehicle segment, NIO primarily, as well as, because, and the reason why I say that, because China was on a 2-month lockdown, and so they closed their factories, they closed everything, and so they're gonna really, they're just gonna really start, and they had opened up, and so they're delivering more, and they're selling more, and so they should be kind of back on the bandwagon and stuff, because the first quarter was kind of insane. So they should have a much better second quarter. As well as Tesla. They opened up their Texas factory, so they're just mass producing as many vehicles as they can over there. So we should see some pretty, hopefully we'll see, because even though they'll talk about parts, limited parts and whatnot, all that is the media trying to scare investors. They're trying to cause the Tesla stocks to come down this report is going to cause Tesla to surge, because the news is most likely to say, oh, Tesla was able to pull it through, even though there was, limited parts and supplies and blah, 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 and so Tesla's going to pull it through. Just you watch. They do it every single time. So for activity, I use a website called barchart.com. There's an options menu here. You click on that, and then there's most active options. Now, when we're looking at this on the weekend, this is going to basically pull up, or when the stock market's closed, it's basically going to pull the last previous day's most active options. And this summarizes the whole entire system by options volume. Now, options volume is the current day's buying and selling activity. And it resets itself every day back to zero. So it really helps provide us a lot of necessary information on different stocks. Now, even if you're not into stock options, this is still very highly valuable information, because again, the pros say always follow the money. And so we can see where the money's going. We can see where it's going, and are investors betting the stock's going up, or are they betting it's going down, or are they straddling? Is it 50-50 or close to that? Like, for example, Tesla's right here, dominated the list, just barely. Apple usually dominates the list. And the reason why these are very, very commonly traded is because they're very popular to day trade and to swing trade. The algorithms are very predictable, and they pay a lot, even though they may only move 1, 2, 3% at a time. But that 1% could be a 20%, 30, 40, or 50% gain or loss in the options world. So, but we see Tesla dominates the list, but out of this amount of options volume, almost 55% are betting the stock's going to go up, or 45% are betting it's going to go down. So this is obviously straddling, or they're with a combination of betting on the big volatility swings on last Friday. But for the most part, it looks like that they're going into Monday straddling, because they're not exactly certain whether the next day is going to be bullish or bearish. And so a lot of times, if you see the much higher numbers, like 60, 70%, a lot of these investors are pretty optimistic that the next day is going to continue to be bullish. So these are all pieces of the puzzle that we need to provide us clues to, that way we know what the days are going to be like. And so, but a lot of times, if we're looking at this stuff regularly on a daily basis, we may find a stock that may be what I call flying under the radar, a stock that's not normally on the list that all of a sudden appeared on the list. We can see like NEO is, normally they're on the list, but they're normally on the bottom of the list, but they're like 7th place here now. And as we get closer to Friday, we're probably going to start seeing more electric vehicles on the list, because they're going to take advantage of what's going to happen before it happens. And then as we're going to have Micron be releasing their earnings, we're going to have the semiconductor become more volatile. We're going to see the AMD and NVIDIA become more volatile, 5% swings. That's huge in the options world. And so, but these are just a lot of stocks that we need to put on our watch list regularly. And but these are our most favorable stock options to trade. And you can see that 1.5 million. We have another million here. Amazon never used to be on the top of the list, because they were like $2,000-$3,000 a share, and their options were very, very expensive. But now they become basically your number 3 most popular traded and day traded, swing traded stock option. But I still don't like it, because it has a lot of time decay. Where both the option, or both the calls and the puts, seem to depreciate much faster than Apple and Tesla. So Apple is still our number 1 day traded and swing traded stock option. It is our default. We always go heavy on that, where anything else is usually kind of light, especially if we're doing earnings. Again, those are our lottery plays. Lottery plays is when we put money into something. If it doesn't work out, we lose everything on it, that it's not going to hurt you. It's not going to affect you. But these are our primary plays. Apple is primarily, it's more common because it's more affordable, it's more cost effective. Usually your options are maybe a couple $100 a piece, $100, $200, $300 at most. Tesla's usually like $2,000, $3,000 a piece. So this is more for high rollers once you start getting up to that level, because then you can start doing, investing bigger dollar amounts with smaller contract amounts, where normally if you're doing bigger dollar amounts with Apple, usually you're dealing with larger contracts, and when you're buying and selling, all those contracts don't execute immediately. They do it in chunks. You may have like 5, 10, 20, and even though you're trying to buy hundreds of contracts or selling hundreds of contracts at a time, they'll execute in chunks, and then you'll have to kind of go in there and keep, replacing the order, modifying it and stuff. And that's why it's just a lot more convenient once you become a high roller to then start straddling and day trading and swing trading Tesla, because you're just not having to deal with as many contracts. I'm going to read, see if there's any other questions in here. July 1st. Okay, there is no volume on the ticker XAir. Yeah. So again, Joe, good point. There's no volume on XAir. So most likely that's probably just best just to leave alone, or again, be the lottery play where we want to get in right before the earnings. That way we're not suffering from time decay or depreciation, because if there's no volume, then it's going to depreciate fast, or much faster than if it would have volume. And so, again, XAir is going to be our lottery play if we were to do that. As long as it's going to be, as long as we anticipate it's going to be a big mover. Okay, so the next area on the bar chart website is going to be our options volume leaders. So we want to click on option volume leaders. This provides us all the most highly active individual calls and puts, but it's important that we look at the expiration date and the DTE, which is basically the number of days until that option expires. Because when we're looking at it either on a Friday or Saturday or Sunday, or when the stock market's not open, it may be already expired. And or in this case, these zeros basically, these are expired. They're so we have to try to find the ones that are still active. So really, out of all of these, we have ET, which is currently at $10.10 a share. We have $11 call strike price that expires in approximately 1 month. Next month is July 29th, or 35 days. Had an open interest of only 2,000, and now the volume of 35,000. So, and if you're new to options, you may be familiar with volume. Again, volume is always the current day's buying and selling activity. But in open interest, in the options world, the open interest is the total number of open options contracts that have been traded but not yet liquidated via offsetting trades, meaning they haven't been sold. So they're being held. So in a way, it's kind of like an accumulation of volume. So if today, or if the previous day, let's say Thursday on out, where the total volume was like 2,000, and now Friday in 1 day was 35,000, that is showing pure buying activity. That is showing that investors absolutely believe, because they're betting a lot of money, that this stock is going to go from $10 to $11. And you can follow it, you can follow the money and follow the same exact contract date and everything, or you can also buy it as shares. If you buy it as a share, because maybe you don't know options, maybe you don't want to touch options, but still you can utilize this information for your benefit. If you buy it as a $10 call, it goes to $11. That's a 10% gain in 1 month. And a lot of people find that can be very beneficial, because if you have a 401k, your 401k probably only moves 10 or 2 or 3% a month, if that. And so to get 10% in 1 month just from one stock is very, very good to a lot of people. I'm more like 10% a day kind of person though. Then we have Apple. Apple kind of, same thing, where we have, 11,000 in open interest. Now we have 33,000 in volume, but the same strike price. So a lot of activity on that one. And then we have the next one that's active is the other call for Apple's $145. So a lot of people could have bought that, maybe sold that, and then bought the 145, or maybe they bought the 140, that way they're in the money, and others also bought the 145 that are out of the money because it's more affordable. You can see that the $145 call strike price is right around $325 per contract, versus the $145 strike price is around $89 per contract. And you can see that it had a lot of open interest of 24,000, and now has a lot of volume of just under 30,000. So this is really going to accumulate as we go into tomorrow. So, but maybe you want to look, maybe you just don't have a lot of time to look at this stuff throughout the day. Maybe you got a day job and it takes up a lot of your time, or whatever. Maybe maybe you just like doing recreational activities, hiking mountains, whatever. And you just don't like looking at, things all day long, and you're more of a long-term, short-term type person. That's fine. Well, we can always click on the open interest. It'll sort everything out by open interest. But again, this website would like you to become a premier member. But and it sorts everything out, but it wants you to unlock it for the entire list. But there's a little glitch here. If we click on refresh after we sorted out the open interest, it'll automatically refresh the entire list for you. So now we have a very extremely high open interest of 200,000 right here for Sundial. Now Sundial is a pretty big hype stock. I don't recommend that. I mean, it's a penny stock. Another one I don't recommend. And there's just a lot of people holding that are always trying to lower their average cost. So avoid invalid, just, So, but then we have AAL, which is American Airlines, which is currently at just under $14 a share with a put strike price at $10. And we've talked about this almost in every single meeting. Even when American Airlines was $10 a share, we've had several puts betting against the American Airlines for the most part. Now this strike price is set to expire next year in January 20th, so around 210 days. A huge open interest. And the volume accumulates little by little every day. And American Airlines keeps falling little by little every day. Next one is Ford Motor Company. Which is currently hovering around $12 a share. We have a $15 call strike price that expires next year around January. And it's also accumulating a very large, heavy amount of open interest, which is a good sign, and also accumulating more and more volume every single day. Then we have another American Airlines, but with a much longer expiration date. Then we have the ET that we had seen recently. And then we have the, I can't remember what this one is, a CHPT, a call. Looks like that one's already in the money. That one's accumulating quite a bit. And then we have Pinterest right here. Look at that, you guys, Pinterest. Now, Pinterest is one of those stocks that has kind of got its butt whooped in the last couple earnings lately. But it's time for Pinterest to come along now. Now, if you're a long-term investor, I probably highly recommend buying into this, because Pinterest is really low right now. I mean, $21 a share. We have an $80 call strike price that expires about a year and a half, and so it's accumulating open interest. Now, eventually this is going to get up here, because it looks like it's pretty early. It's going to be up here, so eventually you want to be a part of it. And the volume 3,000. I mean, this is one of the highest ones out of the majority of the top of the list. It's so far it's number two or three. On the list so far. And so, but that's huge. Even if you buy Pinterest as a share at almost nearly $20 and it gets to $80, you just gain 300% in less than 2 years. That's huge for a long-term investor. That's so all eyes on Pinterest for you guys. So PLTR, they're one of the Palantir technology. They're another one that got their butt whooped in the last couple earnings. They're down at $10, but we have a $20 call strike price that expires right at the end of the year. Buy a bunch of those, it gets to $20 right before our bull season ends. You just gained 100%. So that's going to be another great play. So now we do have Ford Motor Company here with a put, $10 put on the bottom. So a lot of people still like to straddle Ford Motor Company, but for the majority of them, they're bullish on Ford Motor Company. Ford Motor Company is delivering their F-150 Lightning right now. They're building new factories, state-of-the-art factories around the country. So, Ford is going to be coming out with some good things this year and next year. Bank of America is right here. I keep telling you guys, we're going into bank season. Even though a lot of you think that the increasing interest rates is a bad thing and whatnot, and it can, cause an effect and all, but a lot of banks will become a little bit more profitable. And we're seeing, when it comes to follow the money, people are betting that Bank of America is going to go up. They're going to profit from this interest rate hike. We can see that Bank of America is at $32 a share. We have a $40 call strike price and a $45 call strike price that both expire on the same time next year, January 20th. Huge open interest, good, decent accumulation of volume. And then Amazon, looks like we have some Amazon activity here, $20, all good stuff. And so this is, now when we're looking at this stuff, when the market's open, this stuff updates like every 15 minutes. So you want to definitely look at this stuff, see where, people are investing their money. That way we can always follow, the majority. Now there's some other things here too you can always look at. You can always look at unusual options activity, or also the straddling and strangle area. There's four of them. You have a short, long, straddle, and strangle. Now, if you don't know the difference between the two, that's okay. But they both have the same concept. But the difference between the two is that the straddle has the same strike price. The call and the put have the same strike price. The strangle, even though you're still betting against one stock and you're betting that one stock goes up, one stock goes down, but the strike prices are different. One may be $5 higher, or the other one may be $5 lower, but they're the same concept. But the idea is, when we're looking at this activities, we want to try to find multiple of the same stock, so that way it shows more desirable of people straddling. But it also shows that people don't know what's going to happen next, but they anticipate that there's going to be a big movement in either direction. So we start from the top of the list and work our way down. Try to find duplicates of the same stock, and I don't really see multiple of the same. I see two Ford Motor Companies, and again, we've talked about how people do like to straddle Ford Motor Company occasionally. We'll work our way down. There's two C's right there, but we want to see like 3, 4, 5. That would be good. Twos, that's okay. At least it's something. Not really seeing a whole lot there, so we'll go to long, straddle. Long, short, they're all just kind of, about the same. Long, it's not what you really think. It's not like a year or a couple years from now. Because when it comes to straddling, we need volatility. The more volatility, the better. And so when it comes to straddling, it's always recommended to try to pick a shorter expiration date, maybe a week or a couple weeks or a month at most. So again, we'll work our way from the top, work our way down. We got two T's right there. Wish there was more, so wish right there, just the one. PBR, no, not really seeing a whole lot of multiple of the same on this page either. So we'll go to the next one, short strangle. We have BBIG. We have two of them there. We have a third one there. Looks like we just got 3 here, so we're starting to see some more activity there. AMC, we got 1, 2, 3, 4. We have 4 AMCs. AMC, though, is one of the ones that do appreciate or depreciates quite rapidly. Any other ones? No, I don't see any other multiple of the same ones. Then we'll go to long strangle. See if there's any multiple of the same things here. We have a couple Amazons. We got 1, 2, 3, 4 Amazons on this page right here. So it's showing activity on straddling activity on Amazon. Let's see, work our way down. We got Meta for Facebook, just the one there. But we've seen Meta on some of the other ones, just only 1 per page. MU, so that was the Micron, as we were talking about. They have their financial earnings this Thursday, right before the stock market, or no, I mean right after the stock market closes. So we're starting to see that people are some straddling activity is happening right before then. So again, this is a great way to really look at stock options activity. But for Joe, let's say we want to look at most active individual calls and puts for a particular stock option. So there's a website we can use, nasdaq.com. And I usually just change the ticker code in the URL address. So we'll just put the X error in there, and that way it'll pull all the most active calls and puts for that particular stock option. And so that way we can see, and it's all sorted out by volume. So we have the most active calls, most active puts, and then that way we can see where people are investing their money. We can see the open interest, where people are kind of holding on, and where the activities is going. But again, as we were looking at some other highly active stuff, like let's say Apple. Apple's most active calls and puts are right here. Now we have huge numbers. Look at that volume on this thing. 175,000 just for this particular individual call. Now it's important because when NASDAQ updated their website, their user interface, they used to have the strike price right on here, but now they kind of require us to click on the bar or the strike price, and it'll take us to that particular set of information. So it shows that this individual $141 call strike price had expired already in June 24th, just the other day. So when we're looking at this during the weekend, we have to try to click on them just to make sure that it's not expired and it's still active going into the next week. That way we know what's still kind of current and what's not. And we can kind of also tell by the value here. So this is 1 penny, so that expired, worthless obviously, so we need to avoid that one. So we'll go to this $140 call strike price for $350. We can see that it expires in July 1st. So this now shows that this is the most current one that's not expired and most active one, with 33,000 in options volume and 11,000 in open interest, showing a tremendous amount of unusual buying activity. And it's up 64%. But look at this other one. If you guys had traded this one last Friday, you just gained 300%. And that's why we like to straddle. That's why we recommend straddling, because you can only lose what you put on one. You can never lose 300%. You can only lose 100% or 99 point whatever percent, but your gains are potentially unlimited. Why not straddle? And so hopefully this stuff makes sense. Anybody have any questions or comments, anything you guys wanted to go over? I'm going to kind of read through the comments here. I don't see anything there. If you don't have any comments or anything, I'm assuming everything makes sense. You guys are ready to rock and roll. Excellent. Well, again, this is recorded. I will upload this to our YouTube channel for your reference in case any of you guys missed out You can also share it or look back on it after the week has ended, because you'll notice how accurate a lot of this information is, by around like 80% with accuracy. And so, but again, if you guys ever have any questions, comments, feel free to message me in our chat room or message me directly. Just you guys stay safe, make good choices, and make a lot of money. This is going to be a very volatile week. We'll see you next week.